am Martina Young with My Enterprises and switching hats, Boss Taxes. I'm an entrepreneur's trainer, so I work with aspiring entrepreneurs and business owners and getting their businesses up and going and profitable. And then on the other side, what am I
No.
phrasing? I hope not. But on the other side, with Boss Taxes, which I'm actually here to talk about tonight, we help with your personal taxes, business taxes, IRS letters, audits. We're full service year round. A lot of our clients come to us because they've got, a couple of years of taxes and they need to get in compliance. And we help them do that. And the fact that I'm an entrepreneur's trainer and I know business, a lot of my clients have businesses. So I'm able to help there. And we also do accounting services.
Awesome. So, so the taxes got changed for this year. So new tax laws were put into place.
My W-2 earners. Okay. Last year, a lot of you probably didn't even notice that there was some extra change put in. I say change because every person I've talked to is like, I didn't see anything. And then when they're comparing like a check stub from 2017 to 2018, they're like, oh yeah, I didn't see this little $75 this month, or the $60. So when you do the math on 60, let's see my math, it's an extra $720 that was put back for you to use. Sounds great. Now here's the problem. One, most people had no idea it was there. So they didn't know. Nothing really changed significantly in their life. So now with a lot of the tax cuts, things that put more money back into your refund is gone. So for instance, if you filed unreimbursed job expenses. So if you had to pay continuing ed education, your company didn't have an office and you had to work out of your office and you had certain expenses you were able to do under that, you can't write that off this year. Now, the argument is going to be, well, they raised the exemptions and the allowances, and they did that. However, the math still is not working. It's not working favorably, dependent upon your filing status, dependent upon what you earned, what you normally allowed them to take from your refund. So people who are getting hit the hardest are people, oh my gosh, I'm freezing on my side. I just want to make sure I'm okay. Are people who like to file exempt, like they get a bonus check once a year, so they file exempt on the bonus check. Or they claim 2 on their tax returns when they file, but through the year, they're trying to get more money in their pocket, so they do exemptions of 6. So before, when you had those additional write-offs, like job moving expenses, you used to be able to write off. If you moved from California to Georgia, you could write that off.
Shit, I wish I would have wrote that off a long time ago. I didn't know about that.
Oh, yes.
I'm going to amend my
Can't do that. Can't write off your tax. Yeah, right, but this is the crazy thing, because we can only go back 3 years to actually have them cut a check and give us a refund. But you can be audited further than that and have to pay back. So, yeah. But there was a time you could write off your tax preparation fees. So what you paid for tax preparation, you could write that off on your Schedule A, not for 2018. So the whole thing of this, the simplification is to encourage those to take standard deductions over itemized deductions. Most individuals, if they do not have a business, were able to get into itemization because of some of the write-offs. So the theory was supposed to be, well, we give them some extra money, we increase their exemptions or the allowances, which will balance out for the money we didn't take, but then you take away the write-offs, and for some people that was critical.
It's huge for me,
and
for sure.
People are not seeing. Most definitely. If you were saying something about it being important to have a business, I tell everybody, you need to have a home-based business. You need to, okay, here's the entrepreneur's trainer hat. Okay. Your job that you go punch a clock at is not your legacy. More than often than not, you'll never own that big conglomerate of a corporation. They tell you when to go to the bathroom. They tell you when to take your break. They tell you when you can have lunch. They are telling you everything that you're going to do so that you're never going to go in and say, I'm buying this place. How? When they're telling you you can't afford us. There's not even math to come up with your salary that you can even compare to what it would cost to buy that corporation. So you need to have your own business. So find one. Greater than that, then there are write-offs. So if you were affected by not being able to do unreimbursed job expenses and some of the other expenses that you were able to write off, then there are certain things that you can write off as a home-based business. And they want us, here's the thing, the IRS, the government, the IRS is not the government, let's just say so. Let's do the distinction. The IRS and the government and the states want us all to own businesses, because if you own businesses, then we're employing people. And if we're employing people, there's more taxes that can be generated from those people, because if they're not working, the states and the government is paying for these people to have unemployment. They're paying for them to have shelter because there's Section 8, there's food stamps, there's Medicaid, all these things, because people can't afford to do it on their own. So the write-offs and the benefits to having a business are great because it serves a selfish purpose for them. So let it serve a selfish purpose for you and build a legacy for yourself. I don't have kids. Well, then build a legacy and gift it to somebody else when you get old and die. But making sure that your tax situation is together is important. So you're going to hear us talk about compliance a lot. So because Jacqueline, because I can never tell anybody's tax business. So because Jacqueline felt she was not in compliance, and then she had her situation with the IRS, it was like, okay, I need to get into compliance. And you know what, greater than that, because some people I can help and put and say, hey, wait a minute, you don't have to owe them this amount of money. And then some people, we can't make up the numbers. So whatever your status is, it is, but the freedom that comes when you don't have the IRS lurking over here anymore. It's like you can breathe. You're not cringing when you go to the mail and it's just like, oh my God, they sent a letter. Oh. Now it's just like, okay, well, this is the amount. I can make payment arrangements. So let me tell you this. Sure, I can call the IRS on your behalf, and I'll do it for my clients. I definitely will. It's a service that we do. But you can do it yourself. You don't have to pay those big companies that you hear. Oh, I'm freezing on my side. Hold on. I'm sorry. This office, we got bad stuff sometimes.
You're fine on my side.
Am I freezing on your
side? You're
fine.
You haven't froze once.
Okay, good. Okay, cool. So when you go to those places that are on the radio and the television, and they're like, oh, I owed $10,000 and they got me out of debt. Let me tell you something. Those people cost a lot of money. A lot of people are afraid to respond to the IRS. Sometimes there are random audits and there's nothing you guys can do about it. Absolutely nothing. Sometimes you're going to be they're going to pick a name out of the hat and they're going to say, prove your expenses, prove this return. There may be something where someone did a 1099 on you and you didn't know. And then the IRS comes back at the end of the year and they're like, oh, you didn't report your income properly. Oh, we're going to trigger an audit. We just redid your taxes. Now you owe us this amount.
Yeah.
You can always respond. You can always.
You don't want them redoing your taxes, that's for sure.
Their math is never favorable for you. It's never favorable. You never win. But always respond.